So we had a lot going on this week already in the markets. It's Wednesday. We just had Netflix report. We had a big move in the S&P 500. I'm going to actually, Periscope has some limitations with regard to what can be shown on screen. It's really just me. So what I'm going to do is do something a little different, and I'm going to be interactive and show some charts actually on Twitter so you can see what I'm talking about, particularly with Netflix. So I'm going to tweet that out right now, and it should be live. Let's see. Yep, it came up. So it's not as crisp of an image as I'd like, but if you take a look at Netflix, I have been discussing, and I discussed this in the weekend video, that I thought that the pattern looked bullish. I just didn't like how it got there. But I still thought that the path of least resistance was higher. And I was actually going to wait to trade it after the earnings, but I was motivated by a Twitter follower, actually, on a play that I wanted to use. Actually, Yogi Bia is one of my followers. He had made a great idea. He was asking me about a trade, and the trade was to do a ratio, a call ratio, being long the 550 call and being short 3 times the 580s. Which usually, as you guys know, I like to do 1 by 2, but I decided to do the 1 by 3 for a few reasons. One, there were a few criteria that I used to judge this. One was that I was able to get it on for a credit, first and foremost. I believe I filled for 10 cents and also for 12 cents. So it didn't cost me anything to put on if it was to be wrong, per se. The other criteria was that it was 2 days to expiration, meaning it expires on Friday, which is short term. So if the trade got into trouble, meaning like if it gapped too much, I'd be able to kind of wiggle my way out of it with options. I'd be able to do rolls or protect it with other types of option trades. The other part that I liked is if you look on the chart, the lower strike, the one that I was long, was roughly at the expected move and also roughly at the channel high. And if you take a look at the ones that I'm short, when you factor in the math, the break-even of this trade is about 595. And if you take a look on the chart I posted, the 1.618 fib extension is up at 596.67. So that's probably an area close to 600 where people would be looking to... We won't take the call, but it is going to ring, unfortunately. Let's pick up and hang up. So my thinking was that people would probably be interested sellers, at least the first go round around 600, and that I wouldn't get myself too badly gapped through. Famous last words, right? So the play looks like it's going to work. I have to see where we're going to open with regard to the trade. Netflix in the after hours, the high was 542.19. So the stock needs to get through that. If you miss Netflix and you haven't been long into this, it's safe to say that you sort of may have missed it here, at least to the upside. It would, I believe, go higher if we got through that 542.19, but then you're getting really close to the channel high. So if you're long, I would suggest looking to book some profits pretty close to the open. If you're not, and you want to buy a dip, so to speak, like intraday, or if you're looking to short, you'd want to see it lose, like, let's say, the first 5-minute high, or the first 5-minute low, or the first 15-minute low, the opening balance, for some type of a pullback. So the trade, let me do the Fibonacci extension now. I don't have this on the chart I posted. 475. All right. So you want to, if you're looking to buy a pullback, what I would do is put a Fibonacci retracement on from the close, which is 474.5, and you want to go up to the after hours high of day. And if you, let's see, what does that close at? 470. Let's see. And my screen froze. Sorry about that. I was just getting a phone call that came through, which messed up. Hopefully didn't mess up the broadcast. Are you guys still out there? I had just had to decline a call. Let's see. Yeah, it's still showing people are here. Yep, still there. That's good. All right, so for half. So if you put the Fibonacci retracement on this sucker, the halfback is 508.34, and the 61.8 fib is 500. So, and the old reference high is down at 489. So if you want to play this early on, you might want to do something like put some type of a put ratio on that expires. I mean, you might not get it by Friday, but for sure sometime in the next, like, let's say this week's series you can try, or more likely to succeed is next week's. So you could do some type of a put ratio where you buy a put and then sell, let's say, 2 times the amount below for some type of retracement. Or if you're looking for continuation, I do think it's possible that we do grind our way up to that, close to 600, which is 590, with the 596. So if you're looking for that, you really need to see it get above that 542.18, which is the after hours high. Again, the play I did was I was long one time the 550 calls and short 3 times the amount of the 580s. I know a few people did this. Peter did it, for example. We were discussing a little bit after the market. So hopefully we'll have some juice still in those 550s, although it is peeling back a little bit. The ideal position would be to open up pretty close to 550, and then the 580s really just get slammed, and be able to pump that out for a few dollar credit, which would be really nice. So thanks. Nice to see you too. Marco, B. So let's take a look at SPY. We had some stuff that went on. Will Periscope be a Bob earnings play? I don't know what that means with regard to being Periscope being a BABA earnings play. I wouldn't say Periscope is. Will I talk about it on earnings, or does Periscope, do you mean, have something to do with BABA? Which, no, it's more, that would be more for Twitter. Twitter owns Periscope. So with regard to SPY, today we had a large MOC imbalance. It was almost $1 billion to the downside, which is considered size, and that was the reason for the selling at the end. Also, I think a lot of people obviously played long. Some people probably got short with the gap. We had 2 sessions ago, so Monday, we had a look above and fail, meaning that we looked above the trend line and failed, and that the market pulled back. So I think a lot of people were short and used that high of day as a stop, and then the next day we went down, but where we went down, we held the 50 and the 20-day moving averages, and then today's gap was up above the downtrend or the down channel, and it held. It was a gap and hold, and then it extended, and we took out that high of day and ran the stops. So the logical next point is that we could potentially get up to 211.28, and if we clear that, 212.24. The only caveat is in the last sequence that we had of the box, so to speak, in SPY, it had 2 failed attempts to break out and 3 tests of the range low. If that was to hold, and that was to be the case again here, we would wind up coming back down to 204. So you have to be very vigilant. If we start losing back under the downtrend, you have to be a little bit more cautious, in my opinion. And I didn't prepare a screenshot of SPY, although I can do it quickly if you guys are interested here. I'll do that now. But we can discuss if anyone has some questions. This chart's a little bit mucky just because I use it. I have a lot of my levels on here that I use in real time to trade. So that might be helpful too. If you save the screenshot, you could use it for yourself. If we have a rally or if we come down, you can see the levels that I really use and sort of my thinking. So I'm going to post that. For now, though, you really just want to focus on the levels, not so much the trend lines, except for the down channel that I had mentioned. May you go over Apple if you haven't done so. Sure, I could discuss Apple. I think everybody really likes to discuss Apple. I sort of would like to use this Periscope more for. I guess, bigger types of questions rather than technical ones, because I can't really show you the charts like I can in the weekend video update. If you aren't subscribed to my YouTube channel, it's Justin Pulitzer Trades. You could find it in my Twitter profile. There's a link. I'll also post it after this Periscope session. I'll post so people can check out my YouTube channel. I think it's very useful. I think it can do. I do my weekend video updates. They're free. They're usually, unfortunately, they're a little long. Sometimes they're close to 40 minutes. But they do cover how I see the markets and my charts and how I see not only the S&P, the IWM and such, but it also covers the momentum names. So I feel like this would be a better forum to maybe ask like some more qualitative questions rather than quantitative, and I could answer, if there's something fundamental or some type of a, trade discipline. I think that would be a little bit easier to discuss and keep more people engaged rather than just spouting off levels and you guys needing to be engaged with the charts, so to speak. So if anyone has something that they want to discuss with regard to that, I would love to hear some questions. I'm not seeing any. I hope this thing didn't freeze. The Periscope technology, by the way, is still a little bit new. I don't think that. What is a liquidation break? See, that's exactly what I'd like to talk about, a liquidation break. All right, so let me post the SPY chart, and then we'll get into the liquidation break in a second. So here's the SPY. I'm going to post a SPY chart with levels, and that should be posted now. That's on my Twitter stream. If you're not following my Twitter handle is @JustinPulitzer. So I posted both the Netflix and now the SPY chart. So let's discuss a liquidation break. So what does that mean? It means that price has moved up, and it's done so usually in a what's usually been happening is we've been having these more steep run-ups. It's mostly short covering rallies. And then the liquidation break happens when you get what's known as poor highs, meaning price sort of like plateaus at a level for a while, and then new buyers who are coming in who are the latest, the chasers, so to speak, aren't rewarded with still higher prices, meaning they can't find the next person to buy the stock after them. And what do? They sell immediately. And then the stock price comes back down. It's just people who have gotten long at bad prices, and the stock winds up coming back down. It's often much more useful on an intraday chart. I mean, sometimes you'll get it on a daily chart, but it's the most actionable, I think, on an intraday chart, particularly if you're looking for some type of a pullback. That is very helpful. I had discussed it a little bit in Enbridge today, that 52 was starting to form a bit of a poor high, and then we had it had a liquidation break. That's a great example of it. There are some others that I cite on the stream. I'll do my best to post a chart, but actually, if you're curious about what a liquidation break is and you want to see the more, I guess, detailed video of that, I have one I did. It's sort of a market profile basics video, and it's on my YouTube channel. So I'm going to post that on Twitter right now. So if anyone is curious about liquidation breaks or what poor highs and poor lows look like, you can watch that video. I'm going to post that link actually right now. Let me just do a little copy and paste job here, and that will be up and running momentarily. So that link is now going to be live now. Let me just put that it's a video so people know. So are there any other questions with regard to stuff like now that VIX expiration is over? Will there be less volatility the remainder of the week? Volume and share price don't always correlate. Okay. I don't know what you mean by that. So as far as volatility goes, let's answer that question first. So if you take a look at the VIX, you have had a bit of an IV crush. We're back down, kind of getting toward the lows. The thing with the VIX, in 2007, there was a 9 print, and that turned out to be like the top of the market. So that's what I'm sort of looking for to see happen, for us to know we're sort of more toward the top and getting ready to peak out. Although if you take a look at where the VIX has bottomed recently, it sort of can't go too low. There's like at a certain point that there is a natural value for the VIX, and it doesn't go below there. That usually tends to happen when it's like between this 10 and 12 area. So I would not be shorting volatility here is a general rule. There are some examples that I would maybe short if you look at their individual IV profiles that you can do, but I wouldn't be like, for example, selling puts in the SPY right here. I'd be more inclined to be buying puts as hedges or do some type of put spreads as a hedge against longs when IV gets low. A lot of people like to play the the VIX directionally, like they'll buy calls or puts directionally. I don't really like doing that. What I like to do is use the extremes of the VIX to actually play on like SPY, for example. Yeah, I was just talking about the VIX call. I'm assuming you mean VIX calls. Yeah, I mean, some people play it. I'll tell you truthfully, anytime I've ever really played the VIX directionally, it's sort of not made me any money. It's lost me money. It's made me a little bit of money. It's been a break even. I find, though, that when I use the extremes of the VIX on SPY, that can be much, much more helpful. Like, for example, if SPY is jacking up and we have IV up around 17 to 20, I'll do put ratios, or then I'll start actually looking to be selling naked puts. But in general, I'll be a premium seller. If I know that the VIX is low here, but I still think the market might have some upside, maybe I buy calls in that example. Like, for example, let's take a look at. Let me try and find something with high IV. I think Tesla actually has a bit of a more elevated IV than it's had in a while. The way I played Tesla, I actually, although the current IV has now come down a lot, it was pretty high a couple days ago. Now it's under 40. I had sold some puts before on it for the channel break, and that wound up working pretty well. But yeah, in general, the IV has been really low, so I've been playing more directionally, either up or down, and I've been using more spreads. Because if you're short puts, for example, and the market corrects badly, you have, hold on one second, how many days in your sweet spot per ratio? I don't like usually going out more than one extra week, either the same week or the week after. Ideally, I like to get those on like Wednesday for the following week, sort of when you've hit the peak of the week and there's not as much risk going into the end. If, obviously if you have Fed or something like that, it's a little bit different. I'd usually, in that instance, probably wait till like right after the Fed to put them on, but I like to do them for the same week, or to do it on the one going toward for the following week. I wouldn't go out more than a month max, but that's really kind of far. The idea in that instance is, in the put ratio, is for the stock to come down, but to do it in a controlled, slow fashion. You don't really want to do it like with earnings, for example. Volatility pop to sell into, ideally. No, the volatility pop, you're not really looking for the pop in IV with the put ratio. You're really just looking for the stock to come down, but just a little bit into your kind of into your range. The risk is if it blows through, you're short more puts than you are long, and that position could be treated as long, and you could be under pressure. So that's why the idea is to do it in a short time frame, because the IV. I'm sorry, not the IV. The theta decay picks up quickly in those as you get closer to expiration. So the idea is to have theta decay and price going in your way, but in a more controlled fashion. Were there some other there were some other questions before I had mentioned, but I didn't. How can you beat an algo? By sort of trying to predict an algo, realizing the market you're in. We're in a responsive market, so if people are, for example, intraday, setups might not work. Like, let's say you're playing for a breakout, realize that that they're probably going to fail because you're in a chop range, or if breadth isn't really bullish or even negative, or if it's half and half, you'll probably not be able to get follow through on the breakout, and you would probably be looking to sell that rather than initiate. And the same thing with a breakdown. If you know that the algos, if there's not a lot of follow through to the downside either, you'd be looking to buy those or to cover on that instance, not initiate. Like, a lot of people try to play for the horizontal breakdown and it doesn't work. Pre-card and buy, sell, how do you find the info? As far as the pre-market info, balance of buying to sell, what I use is MOC, and that's for the close. With regard to pre-market, I just look at the futures, and I look at most people don't really use the pre-market or the after hours correctly. It's really for desperate people who are wrong, and I often use it to extract sort of better prices than I normally can. either selling stock or buying stock. But what I'll often do is look at the pre-market low, and let's say a stock comes down. I just use TOS. I just use the Thinkorswim platform. With regard to MOC, I use that guy Danny Riley's site. He was nice enough to give me a complimentary subscription for MOC, probably so I would do things like mention it on Periscope or on Twitter, but that works pretty well. There's also, for market profile, I know Window Trader is pretty good. I usually just use the monkey bars inside of TOS, but you can use Window Trader. That's a really good one. So with regard to the pre-market, I find that if you're looking for a long on, like, let's say a gap down, if a stock comes down and then during the regular trading hours the low is higher than the pre-market low, and then you could take out the opening high, then that stock is usually a long. Or if you see that hammer forming with the higher low, you can play long against that. I actually, in my first video that I ever posted on YouTube, I discussed actually a day trade and a long entry in Apple. So it was still my first video, but it doesn't mean the skills are any less than they would be now. So if you haven't seen that video, I definitely suggest seeing it. It's my very first video I posted on YouTube. Definitely check it out. Any more questions? I sort of want to keep this session a little bit shorter, so I wanted to wrap up soon. So let's try and get maybe like maybe 2 or 3 more in, and then we'll wrap for the day. So let's see. I'm waiting to see some. Could just talk about what I want to talk about if no one has anything. What's your end goal? Great work on the videos. Thank you. You're most welcome. My end goal is to have successful trades. A lot of people, I find, force themselves to trade. They feel like they have to make their daily bones every day, so to speak, and they'll force themselves to get into trades that aren't necessarily the right ones. It's sort of that philosophy I always say, that you can beat a horse race, but you can't beat horse racing. Or they feel they have to jump in and out of every single trade or every single setup. I'd rather focus on my best trade and my best setup than just try and chase something that's being featured on TV, or that some analyst upgraded, or that some talking head likes, or short and then panicking people out of. I'm not seeing many more comments, so here we go. Oh, you're most welcome. Thank you so much for tuning in. I appreciate it. You're most welcome. Let's talk about Apple. Someone had asked me about that. Well, let's do Apple, and we'll wrap on Apple. How's that sound to you guys? If you like that, hit the screen. It puts up a heart, and I'll know. That's also something, by the way, if you guys see something, or if I mention something and you want me to know that you like me talking about that, just tap the screen. It puts these hearts out, and I think it's a little cheesy and corny, what have you, but I do like that. I know that you guys are engaged. If I start seeing a lot of hearts on something, I know I'll go more into that type of discussion. So let's discuss Apple. So it looks like they're trying to hold Apple up. I see that I've discussed that I thought Apple has been in a bit of a box. If you take a look back at the last ranges before earnings, it's been sort of in like these 11-point ranges, or 8 to 15-point ranges, and I don't really see this time being any different. I didn't like that Apple bounced a little bit ahead of the stronger trend line, which was the breakout, which was 119.75. The low in this move has been 121.63, and then we rallied up. And I've discussed that I thought Apple, the day of the announcement that they were being added into the Dow Jones Industrial Average, the pre-market high of that day was 129.85, and then the subsequent trouble where the stock has had issue is sustaining over 127, and that was no different today. I believe we stalled just below 127. It looked above it, but it wound up closing below. So a lot of people are technical at this point. The market's in the control of day traders, I believe, at this point, and they've been using the 50-day moving average as the sort of the buy the dip spot for Apple. I would be a little bit cautious right now, if you're long, I mean, I think if you're long, it's okay, but just use this 50-day and 20-day moving average confluence as your stop. Anything below there to me gets a little bit iffy. For me, the best setup, I know nobody likes to hear this because they're probably already long Apple, but the best setup, honestly, would be is if the stock dumps hard in front of earnings and washes out the weak hands and the chasers and then sets up for a long. It did that the last time before earnings. It had a multi-day rally and then a really big gap down and go the day of, and that set up for a beautiful long. The next day we gapped over it and we never really looked back. The stock just took off. So I would love to see Apple do something like come back down and test the trend line. We're running a bit low on time with regard to Apple before the earnings, but there is still potentially time that it could pull down. I would think that this it depends how you draw the channel. Roughly around 114 to 115 would be the channel low. I don't know if we're going to get that big of a move in front of earnings with Apple, although it is possible. You know, we did have that crazy flash crash day where there was like an 8 or something point range. So it's potentially possible that the stock could have some type of a sharp, quick move down, and that could be a buy. You have the 100-day moving average roughly around that 119.75. So what I would do if there's some type of a down move in Apple, watch the implied volatility. If you can get into like the mid-30s to low 40s, great opportunity to sell out of the money puts. My only caution on Apple this go around, why is this time different, so to speak, is that we got the 1.618 Fibonacci extension, and that was 128.97, and we wound up blowing through it a little bit and got to the 133s, but that was really my sort of end price target for Apple for like sort of the end of the move. So it is potentially possible that, you know, Apple doesn't resolve higher this time out of the box and it does wind up going lower. If it did go lower, I think that it would find a ton of support at the gap fill at 109, like 86-ish. That also coincides with the 61.8 Fibonacci retracement. It's also roughly around the 200 MA at the moment. So I think that area would find a lot of support. However, if we do get into some type of a deep summer correction and there's some type of really bad down move, and let's say Apple doesn't do well with their earnings, it is possible we do see 95 or 100 again. That would be my absolute worst case scenario with Apple, although I do believe that if there was a gap down, the gap would fill before that type of a move. Like, I don't think it would just be like a gap and go and all the way down there. I think it would probably be a gap. Maybe there'd be a little bit of continuation. We'd probably wind up filling the gap and then rolling over later, but I'm not really seeing anything like that in the chart right now. All I'm really seeing is just consolidation and the stock being in a range, and I would think that the strong supports here are between 115 and 109. And non-coincidentally, the way I currently am positioned right now, I have a 115, 110 put ratio on. I had it on for a net credit, and it may expire worthless. Wait, Apple will do that. I'm really sort of neutral right now on Apple. All I have on is that 115, 110 put ratio. I had on a 119, 114, but I could close that, and I used I kind of doubled up my size of the other one, so to speak. I was able to put that on for a credit. I don't know that Apple will fall. I actually do think that it's possible for the stock to go higher, but like I had said, we got my full fib extension, and it is potentially possible that the stock is maybe just fully topped at this point. It might not want to go higher. There could be a market correction. There could be, you know, junky earnings. Summer is seasonally not great for tech, and Apple tends to do well when they have product launches. They just did the iWatch. We're not at new highs. The iPhone isn't going to come out until after the summer, most likely around the holiday season. So I don't really see a lot of news relating to Apple. So I actually think that the move with Apple will be sort of to fade the earnings move. If it's a gap up, I think that you could use that opportunity to sell out of the long position, and if it's a gap down, you could use it for a gap fill type of a play, or to sell out of the money puts, because there'll probably be enough people that missed Apple that are now, wow, it came down, you know, we want to buy it. So I'm sort of thinking Apple after earnings will be a fade. Of course, we'll know the levels at that point to make that judgment. You know, if Apple does gap up, The after hours gap high will be key. Anything over that will be bullish. Anything below that, let's say, would be more iffy. You could also use the gap up high of day, like if Apple goes sideways for a few days and it holds for like more than like 2 or 3 days. Usually the 3-day rule is good. Sometimes Apple will gap, it'll hold for a couple days and then it'll come down. You could use that low of day as a stop if you're long, or if you're looking to initiate shorts, you can use that to have a good trade location to get in. So I think that covers up our Periscope for this time. I hope I answered enough of your questions. I appreciate you guys tuning in. Obviously, if you saw this, you're not missing it, but I will be posting these in the future. If you do happen to ever miss them, I do post them to YouTube. So that's my story. I'm sticking to it. Very cool. Vulcan, live long and prosper. I like that. So thanks, guys, for tuning in. I appreciate it. If you're not subscribed to my YouTube channel, it's Justin Pulitzer Trades. You could find the link in my Twitter profile description. If you're not following me on Twitter, you should. My handle is @JustinPulitzer. So with that, I will bid you guys adieu. Let's have a great rest of the week, and cheers.